There are moments in history where the system doesn't just shift, it flips. Today was one of them. President Trump just became one of America's biggest Bitcoin investors. The same man who once called crypto a threat to the dollar just put his own name, money, and political weight behind it. If you think that's a coincidence, you're not paying attention. This isn't about Bitcoin. This is about control, liquidity, and the next phase of the financial reset that has already begun. Folks, welcome back to the Bullwinkle Blueprint. If you're new around here, do me a favor, hit that subscribe button. And if you're coming back for some more of that good, that real good info, hit that thumbs up. The more thumbs up we get, the more YouTube pushes this content. It's free and is the ultimate way to support the channel. I appreciate each and every single one of you that come here every single day and hit that button. Thank you from the bottom of my heart. Now, without further ado, let's get into it. Markets, nice little bounce up today, nice little rebound. You love to see it after that mass liquidation event we've seen across the board. Total cryptocurrency market cap, it's creeping up a little bit. 3.75 trillion. Bitcoin's coming in at 113,943. It's up 1.73%. ETH leading the charge, up almost 8%, coming in at 4,121. And XRP, yeah, buddy, coming in at $2.53. It's currently up 2.41%. Now we're going to start here. Just in, President Trump, he is now officially one of America's biggest Bitcoin investors. That's right. President Trump is now officially one of America's biggest Bitcoin investors. You know, the man who built his brand on real estate, leverage, and gold just turned digital. This is the same playbook we've seen 100 times in history. When power shifts, money follows. Trump doesn't move first, he moves last after the groundwork is already laid. He's not buying Bitcoin because it's trendy. He's buying it because he knows the rails are being rebuilt around blockchain. Now, this is the pivot, the exact pivot. The moment crypto stops being a rebellion and becomes the architecture of the new financial order. Think about it for a second. A pro-crypto presidency means green lights for ETFs, regulations, clarity, institutional inflows, and yes, the on and off ramps for assets like XRP that actually move money through the system. And that brings us to Wall Street, because they've been watching every tick of this, and their next move, well, it tells you where the next $1 trillion goes. The crypto crash, that wasn't the end. It was the filter. It shook out the noise so that the big money could re-enter, and they could re-enter clean. Here's the reality. Wall Street money always moves towards liquidity and credibility. When markets crash, they consolidate. They don't consolidate into meme coins. They don't consolidate into hype coins, but into blue chip American crypto. That means Bitcoin, Ethereum, we could say yay and nay to it, right? And whether the media admits it or not, XRP. Because look, XRP is the only digital asset that's regulatory tested, globally integrated, and tied to real settlement networks. So when a capital rotation begins, and it's already started, the money doesn't scatter, it concentrates. So while people panic over a 30%, even 99% wicks out there, you want to know what's really going on? The hedge funds are quietly reallocating into the infrastructure plays, the ones that survive regulations and serve the banks. Let's listen to this real quick.
I think an interesting thing here to also mention is that this almost exclusively happened on the perp order books. It didn't happen on the spot order books. And there's a reason for that. First of all, a lot of these, you'll notice this didn't happen with like XRP or some of these older kind of alts that are still popular. A big reason for that, in my opinion, is most of the alts that were affected had like 2 to 3 market makers that were designated market makers for that token. According to what I've heard from a bunch of people, it became just absurdly hard for market makers to actually place orders. And because there's only really at scale like 3 companies placing bid and ask orders on the book, all of a sudden none of them can place orders. So the price just becomes, no one's setting price. The price in theory can go to almost nothing. So I think that's what you probably saw with Atom. It looks like a smaller market maker also blew up. So like if you look at Resolve and some of these, I'm forgetting the exact name, but it's something like Cyant or something like that. It's like, or like not Cypher, but it's similar. They basically, their entire Hyperliquid account got evaporated, and all the coins that they were market making basically almost went to zero. And so I think that.
All right, we can stop it there because this is going to bring us to the question on everyone's mind. Is this the end of the cycle? Or is this just the beginning of the next parabolic leg? I'll blow up Egrad's chart because people keep asking. I'm getting hundreds of DMs on it. I get it. Look, that liquidation event was no joke. Are we heading into a bear market? That's the question. Is it over? Well, let's look at the math out there and not the mood. Your RSI, you see the screens hovering around 67, an awkward formation, sideways chop. Looks scary, right? Well, historically, this is exactly where the mid-cycle breakouts actually begin. Because as you've seen, I don't know if you've seen the chart actually, I don't have it pulled up, I wish I did. If you overlap every major bull cycle since 2013, the same structure appears. Momentum stalls, RSI cools, and everyone starts calling the top right before the next leg rips. Here's my stance. We're going to sit back and we're going to observe. I'm not selling anything, I'm holding. We'll see what Q4 brings to us. We'll see if the RSI is going to trend up or down. We climb up to the upper trend line, volatility returns, and then we reassess. Because until proven otherwise, the macro structure here still screams continuation. Fear is noise and liquidity is truth. And liquidity, it hasn't left. It's clearly rotating. And while the charts tell us one story, corporate moves, they tell us exactly another, starting with Ripple, expanding right into the heart of the Middle East. We briefly touched this in the first video of the day, but I want to get into this. Because Ripple planted its flag in the Kingdom of Bahrain, and it's not just a PR stunt. They have a partnership with FinTech Pay, whose Ripple is working directly with regulators and banks to drive blockchain adoption, education, and pilot projects across Bahrain's digital asset ecosystem. You may ask, but why Bahrain? Well, because it's the bridge between Western banking standards and Gulf sovereign wealth. It's where financial policy and innovation meet. This move signals maturity. Ripple's not pitching anymore. It's being invited in. Pitching days are over. Institutions want the rails that move liquidity efficiently, and Ripple's quietly building them behind the scenes. And if you thought that was big, well, I'm not done here. Because wait until you see who Bahrain's central bank, what they just did to make Ripple's presence official, because they are now Sharia compliant by the Central Bank of Bahrain. That's not marketing. This is what you call institutional validation. What does this mean? Well, the certification means that Ripple's technology now aligns with Islamic finance principles, unlocking access to a multi-trillion-dollar market across the Middle East, North Africa, and Southeast Asia. It's more than just a checkbox, right? It's a passport, one that allows banks, funds, and even governments to legally integrate Ripple's infrastructure. Think about that for a second. The same network that once called it too risky for banks is now approved by a central bank. That's the evolution from speculation to regulation, from rebellion to rails. And it doesn't stop there, it gets even deeper. I want to go back to 2023, November 7th, because this plays into it. Who remembers when Ripple partnered with Onfrock and they flipped the switch, opening up 3 new payment corridors between Africa and the rest of the world? This is massive, and it all connects back in to what we just seen going on in Bahrain with the central bank. So for years, Africa's biggest financial problem, it wasn't access to money. It was a movement of money. Slow wires, high fees, zero transparency. Now, with Ripple payments and crypto enabled and compliant transactions that took days to happen, well, they happen in seconds. And we aren't talking about Ethereum anymore. We are watching the real world implementation of blockchain finance. Each corridor open creates liquidity demand for XRP, real transactional institutional demand. This isn't about price hype, everyone. It is about utility that is scaling globally. Ripple's now in North America, Europe, the Middle East, and Africa. Four pillars of a single interoperable system. So, yeah, Trump just flipped the crypto switch. Wall Street's flowing in. Ripple's expanding globally. And the central banks, they aren't fighting it anymore. They're signing off on it. So the question isn't whether the new financial system is coming, it's whether you're positioned for it. The time mainstream figures this all out, guess what? That switch will already be flipped. Hang tight, everyone. No one said this was going to be easy. We've spoken about volatility. You just had the most volatility these markets have ever seen. If you're holding spot, you're not affected. I'm going to leave it right there. Hit that thumbs up on your way out. Drop me a comment down below. I'll catch all y'all bright and early in the morning.